So I often get asked, as someone that saw this for himself, what caused the Great Recession, and is that going to happen again to housing? Like, if I buy a house, could the market crash and values go away? Well, being on the ground floor as a loan officer that was selling mortgages, the kinds of loans that are available dictate the recession. And back in the 2003, 4, 5, 6, 7 generation, we would give mortgages as a bank to anybody who wanted a mortgage. There was no verification process. And we all know, no matter what business you're in, if there's no verification process, then it's going to be a runaway train. So the market was a runaway train. Anybody that wanted to buy a home or get a mortgage could. There was no income verification. We lent to people that had less than best credit. So just right there, you're asking for trouble. Now, here's the main reason why we had a recession. People were buying houses with no money down. So when people say, I lost my house, I disagree. People didn't lose their homes, because to lose something, you have to first own something. And if you bought a house and put zero down or a couple $1,000s down, and then the bank took the home back, you were just a glorified renter. And so when the market crashed, it's because these people had no skin in the game. With no skin in the game, there's no reason to stay. So it was a mass exodus where people just walked away from their home, and people just really screwed the banks over because they said, I'm not making a payment. So the banks screwed the customers by putting customers in loans they couldn't afford. Customers then screwed the banks by saying, I'm not going to pay you. You have a massive exodus of companies closing because companies are over leveraged. So it was the perfect storm for three things all at one time. Companies who lost their investors and they couldn't make loans anymore. Customers didn't keep their homes because they couldn't afford their mortgage payments. And banks made loans to customers that they couldn't afford. So you had a situation where it was non-compliant and loans being made that shouldn't have been made. And people walked away from their homes. And then when the mantra is, and rates weren't even very low back then, they were 6 and 7%. And the loans people got were interest only, adjustable, where they're buying their house for $3,000 a month, and then the payment adjusts to $5,000 a month, but they can go rent for $2,000 a month. What would you do? Will you stay in your home if your payment doubles or triples, and you can go rent the home, rent next door for half the price? Of course you're not going to, as the general population. So what caused the Great Recession was irresponsible lending, buyers that put no money down, and loans that adjusted in payment all at one time. And then behind the scenes were all these loans being packaged up and sold on Wall Street, where investors were told that these loans were great credit clients. And then all of a sudden, they opened up the box and saw it was a bunch of people that weren't paying their mortgages. So when that happened, the investors shut off the money they were lending to the banks. So the banks didn't have money to lend, customers couldn't afford the mortgages, and investors were being screwed on the secondary sales Wall Street market. And that's why the market crashed. If you're going through a loan process today, you understand that the verification process is intense. You have to go through so many steps and checks and balances. That's why I personally don't believe the market will ever have a crash again. Now, will it have a correction of 3 or 4 or 5% up and down? Of course, things don't always escalate up. But in the long run, because everybody needs a home, home ownership is going to be something that is sought after because it's a great tax asset and it's something that you want to have memories in. So because it's something that is fun, it's necessary, and it's an investment, people will always lean towards being homeowners in the big picture, because what better thing could you own? And here's the reason why. If you buy a home and your mortgage payment is $2,000 a month, you can rent for $2,000 a month, or you can own. That payment on the mortgage eventually pays off the asset, and the value of the home goes up. That's why people tend to always become buyers. And as long as banks have good checks and balances in place, you can be sure that your neighbors can afford their mortgage because someone has qualified and vetted them. And with good quality neighbors, the market should always, in the long run, rise. That's what caused the recession and why I personally am not afraid of it happening again.